friends, how we doing? I'm making this video from Greece, and that's just me trying to practice the power of consistency, that no matter the situation, sometimes despite the circumstance, it does mean a lot to just show up consistently over time. I think that's how it exponentially starts to grow and compound whatever it is, that result that you're looking for. It could be in life, in a personal development journey. It could be here on a dividend portfolio. For you, for me, it's just a matter of consistently showing up over time. I've noticed that just doing that alone, staying consistent with the initial plan, the initial vision, can get you somewhere. Power of consistency. And that is going to be the topic for today's video. But as always, friends, here we are once again with the primary intention of this video, which is just to show you another monthly dividend portfolio review, this time for the month of September of 2023. And time continues to tick, friends. It's the whole premise of this channel. If you've been here for a while, welcome back. If you're recently new here on this journey of continues to tick, of watching this dividend portfolio grow over time, welcome. This journey is going to be long. I'm not going to stop. This is it, friends. This is continuous until the day it's not. But my plan is to continually show you from my very beginning all the way until I reach that end goal of looking at my passive income pillow coming in from this nice dividend portfolio. The day will come, friends, and I'm in this workforce in full swing. I don't plan to retire anytime soon, even if I can even envision it. I mean, it's not really possible right now. That's why I'm aiming for the age of 50 as kind of my earliest retirement age. So I'm 28 until I reach the age of 50. I have quite a bit of time to document this dividend portfolio. But having time isn't a bad thing, friends. Sometimes having time gives you the time to make these consistent steps, consistently implement a strategy, and allow it to play itself over a certain duration of time. And that's what I'm doing. And I'm going to show you some things in this dividend portfolio review about what I mean with consistency. I'm going to tell you how much I fund my portfolio and how often. A lot of this does play into that consistency that I'm speaking about. And then apart from that, friends, I'm going to show you some details of this portfolio. You're going to recognize, if you've been here for a while, a lot of this doesn't change. But it's important to just remind yourself, take a deep dive into your own portfolio. Take a look at some of your sector allocations. I'm going to show you some of my best and some of my worst performers. But it's important to do that from time to time for yourself. In the very beginning of a dividend portfolio, you're gonna, have the urge to look at all this stuff almost daily. For me, friends, I've been doing this for a while now. I started in the year of 2020 in July. And I've gone to the point where I just kind of look at it weekly, bi-weekly when I make these videos. I have a lot of trust in my portfolio as I continue to go over time. But apart from the sectors, friends, I'm going to show you, my number of current holdings, my current dividend portfolio's yield, and what is my expense ratio. I'm also going to discuss, some of my short and long-term plans. I do this every single month. Sometimes they just don't really change or adjust very much. But the point is just to kind of keep that muscle flexing, thinking about those short-term goals, those long-term goals for yourself, friends. That's the only reason why I repeat mine out loud. It's just to kind of flex that muscle of thinking about the future, which for me comes so naturally. That is naturally where I try to stay, is living in this future moment coming up for me. That's why, luckily for me, I have a partner, a long-term partner who keeps me grounded and keeps me present, keeps me here literally coming to Greece right now and living in this moment. I'm currently in Santorini, friends. It's been a really amazing trip. And then, of course, friends, I'm going to show you how much my dividend portfolio currently pays me in dividends. And as we scroll down here, friends, I'll just tell you, for this trip, this was a 2-week trip in Greece. I'll probably show more about it on my second channel, which is Continues to Improve. But I'll show you little clips here. We started off in Athens, and coming from California, that was an 11-hour flight. And then from Athens, we went over to the first island we visited, which was Milos. It's just a small town, or a couple small towns on a small island, and it's really known for its landscape and its beaches. And one of the most beautiful places I've ever seen in the world was there, and it was called Cleftico. And the waters were so clear. There was just caves and landscaping there. The landscape there was amazing. It was just rock and white rock. It was just beautiful. We actually got really lucky with the weather. And then from Milos, friends, we came over to the one place that most people have to talk about when they come to Greece. And no, it's not Mykonos. It was Santorini. So right now I'm literally in Santorini. And maybe as I speak about this little section here, I'll show you guys, my current stay in Santorini. And wow, has just been an amazing view. And I'm a smaller, more chill pace type of vacationer. So that's why I like Milos. But it was nice to come and visit Santorini, because you kind of have to get that just to get the sense of what it is that you like most. You kind of have to get exposed to a couple things. And, I wouldn't have appreciated Milos, and specifically a small village known as Klima, if I didn't come to Santorini, where Santorini is a lot more people, it's a lot more crowded. But, there's all different ways to vacation. I'm currently staying in Amiro Vigli, which is like the middle part of the nicer part of Santorini. So just keep that in mind, friends. If you ever want to go to Greece, maybe you have some questions, reach out to me. But friends, for the video topic, like I mentioned earlier in this video, is to just talk about the simple power of consistency. And I just wanted to mention 3 things regarding this, what I think is the power of consistency. The first thing is you have to find a path. And the second thing, you do not get impatient. And then, of course, you have to have this idea in the back of your mind that there may be moments in time where you may have to adjust and pivot. And I put these hand in hand, adjust and pivot, right? It's like have a pivot point. And I'll talk about these. But starting with finding a path, friends. Let me just show you. Here we are on Continues to Tick, right? This is a YouTube channel. This is a good example of just the power of consistency. I, at one point, was like, you know what? I'm just going to start a YouTube channel, and I'm just going to go with it. I'm going to try to just practice it, maybe get better over time. But at the very least, I'm going to show up every single week. And that's what I've done. I've just been showing up every single week since the very beginning of this channel, Continues to Tick. And trust me, friends, it was not a straight line. But my point was just showing up every single week, regardless, just show up. And that is consistently showing up over time. And now I'm so many videos in deep now. But as you can see, friends, just scrolling down to the very beginning, this was me 3 years ago, and it begins at $2,770. This was roughly in July-ish, right when I first started this portfolio. But as you can see, just week after week, I've just been showing up, uploading videos, and just trying my best to make something here on this channel. And I'll tell you, I was like 6 months in and I barely had maybe 15 subscribers. And now we have 1,270 or so. And, there's something here, right? So now I'm just continuing to try to upload, continuing to show up, regardless if I'm in Greece, regardless of the situation, despite the circumstance, I show up and I'm consistently doing something to see an end goal, see that end point that I desire come to fruition, right? Which is to build an awesome community here. And there's, 2 goals with this: build that awesome community, but at the end of the day, just see myself build a substantial dividend portfolio. And I just want to document it. And I can go to my second channel too, friends, because I'm slowly getting a little bit more traction. So this is my second channel. It's called Continues to Improve. It is just a men's growth channel. It's me just showing you my journey of personal development, things that I've learned up to this point. I kind of feel like I'm successful at this point. I made it to become an RN. I've made, 6 figures, a low 6-figure mark here in California. I can survive in this life. I'm fine being at this point. Like, I have nothing else to prove other than to prove something to myself. And that is the only reason why I continue to try to improve, is to try to improve myself. trying to continue to push myself to be a better and better version. And there's a lot of reasons why, but that's just the general sense. And on this channel, I tell my story, right? I have some self-talk videos, I have some modern man videos, I have the male nurse series, and I have a couple shorts. But same thing with my Continues to Tick channel. I just upload, consistently. I just show up consistently, and I've been seeing a little bit of some traction finally, and some end result, or some stages kind of coming into the picture here, reaching 50 subscribers, reaching 100 subscribers, now passing 150 recently, and my next goal is 200. But I consistently am putting energy into this channel, trying to see an end goal, trying to do something different. And this is the power of consistency. That's why when I say find a path, find a path. It could be a YouTube channel, right? It could be a different YouTube channel, but it can also be a dividend portfolio. And that's what we all can relate and share here together on this particular video is, your path in this sense would be, creating a dividend portfolio and seeing it through. As you're going to see when I get to my portfolio review, I'm going to tell you my funding schedule. But you have to find something, right, an end goal, and then just continue with it. And then now this goes into the second plan, right, which is to not get impatient. Don't get impatient. When I first was uploading to YouTube, when I first started my dividend portfolio, it was like an infant, it was just so immature. I didn't know exactly how fast, I would see results, but the point was when you start, there's nothing. There's a seed. And just like when you put a seed in dirt, you don't see anything on the surface. Everything is happening underneath. And that's how it is with the dividend portfolio. You're funding all this money, you're doing it consistently, and you're like, where are my dividends? Where are my dividends? And same thing with the YouTube channel, right? You're uploading. You're not getting subscribers, you're not seeing results, but you know what the path is in these scenarios. You know that if you invest consistently over time, right, this seed is going to finally sprout. This dividend portfolio is finally going to start to pay you dividends, and then those dividends are going to increase, and then now it becomes a significant or substantial amount of passive income. You then use that passive income, right, to then live a better life, maybe build that passive income pillow that you just fully can live off of in the future, right? These are all just scenarios, but a very important key is to not get impatient, because yes, it's hard to start, it's hard to find a path, but sometimes it's even harder to not get impatient and give up and change course along the way. And that's why when I speak about changing course, it's just small adjustments. I call it adjusting and pivoting. Adjust and pivot. Because if you make large adjustments, if you make large and significant changes, you got to be careful. Because if you do a quarter turn, and then another quarter turn, and then another quarter turn, and then too soon you do another quarter turn, you're just going in circles, right? You've just made a full circle. And if you make a full circle way too often, you change way too often, you're just going to spin. You're going to get no traction. That's what happens to tires in mud. They spin, right? You do quarter turns too often, the wheel just spins and you get no traction at all. And that's how a lot of people find themselves, on very long-term visions for themselves, long-term desires that have end goals that they want to achieve. If you get impatient, if you adjust and pivot too often, you're not going to see that end goal that you want. And I think if you look around you, friends, most people, we just want. It could be want things, it could be wanting an outcome, it could be wanting, relationships, connections. We all want something and probably want many things. But in order to fully get to that end goal and see that outcome come to fruition in anything you do in this life, you got to be careful. You got to be careful. There's a strategy behind this. And I'm trying to show this happen over time on my YouTube channels, on this dividend portfolio journey, just to show you a path, show you the path that I'm taking. And as always, friends, as we make our way further into the video still, here we are now once again in the Jesse's cash flow portfolio. And I've been so busy, planning just last minute little touches here and there for this trip to Greece. Like I said, I'm currently literally in Santorini, recording this from a couch in a pretty nice hotel resort room, where the AC doesn't turn off. It's like probably a little humming in the background of this audio here. And I don't have my equipment, but we continue. We continue regardless. So in saying that, as you can see, I have some buying power here. My last video, I told you I sold some NVIDIA stock. So if you're curious about that whole situation, I recommend you go back and look at last week's video. But the buying power is 546 right now. That just goes to show that, when it comes to the activity, I continue to get paid dividends, and I continue to deposit funds of $100 every single week. $100 every single week is my current funding schedule. It used to be $500 every single week. Now it's $100 every week. And then I'll mention why in some of my short and long-term plans. But going back to the portfolio, friends, we're at $66,525.36. This is with an all-time return of 18%, which equates to an all-time gain of $6,831.04. And then if we just zoom in here, you can see for market gain alone, it's only $2,748. This is on the all-time charts, by the way, just to keep that clear. And then my all-time earned dividends is $4,000. So in comparison to my all-time market gain, I have a higher amount of all-time earned dividends. And that, again, just another example of why I'm a dividend investor. Because these markets aren't always going to be flowing and growing and thriving and green. They won't always be like that. But as a dividend investor, what matters most is not having companies or holdings that you have dividend cuts. Have these companies continue to pay you a dividend and then see these dividends come in. Seeing the dividend payouts, despite if the market's red, is still a positive in your dividend portfolio. That is ultimately what you want to see. You're investing for a passive income pillow. You're investing for passive income. And as a dividend investor, that's what matters most. That is reassurance that no matter how the markets move, it's still moving the right way for you. So I know a lot of us know that, but I just like reminding, those new dividend investors that is the key. That is what we look for. That is music to our ears. I love seeing it. And, just to kind of go in the last month's chart review here, just to show you, I've been taking peeks and, at the Dow Jones here and there. And yeah, the market has been taking a little bit of a decline recently. And as you can see, my portfolio is the same exact way, down 2.23%, down $1,525. But despite the red of the market, we continue to get paid dividends. So over the last month, it says I got paid $203.71 in dividends. And just taking a look at the last week, still roughly about the same, still down 2.51%. And then going year to date, we're actually in the green still, 2.66% return, which equates to a gain of $1,733.59. And if you look closely here again, you can see we're barely in the green with market gain, because the year has been, it went up and now it's recently going down again, but we're barely in the green, $289 of market gain. And for earned dividends, it's $1,443. So such a big contrast. A great year for a dividend investor. Not so great if I was investing for growth with this specific portfolio. And I know this portfolio is not meant for growth, right? I'm trying to do a little bit of both, the dividend growth portfolio, but just that contrast is interesting to see. And if you're curious, friends, I say it from time to time, if you want to take a better and closer look at my dividend portfolio, I know sometimes when I was first starting out, it was nice to just see examples. I do have a link down below in all my videos to share my pie. Click on it, and when finance does a nice thing of, being able to share a pie. So just take a look if you're curious. You can go at your leisure there, and there's no rush. And if we just continue to move down, friends, just switching it back to the all-time view, just taking a look at some of these sectors, let's see some of the best performers. So the best performers still at tech, followed by energy and financials, and then it takes a pretty big dip from there, right? Tech is up 142% for this sector, energy is up 110% for this sector, and then the third one, and following down, it's 40% or less. So these two have been booming, A lot of it in tech continues to be from NVIDIA, which I recently sold a chunk of, and I show you that in one of my earlier videos. But it continues to do so well. Up 438%, which gives me a gain of $3,600. So I believed in NVIDIA for, before this whole AI, boom. And now we just got the AI boom, so I'm just riding it for now. But it's a dividend payer, very small amount of a dividend payer, but a dividend payer nonetheless. And then we have energy. Just taking a look at some of these, holdings in the red. I have utilities at minus 5%, real estate minus 15%, which is not too surprising. And then we have healthcare. Healthcare is always, hit or miss. It kind of goes up and down, so I don't worry about it too much. And then communications, it's kind of the same as healthcare. It kind of goes up and down. It has its moments, and just to show you some data for my portfolio, let's go into my pies here in the research section. And as you can see, friends, I have 51 holdings in this dividend portfolio. I mention it from time to time, my thoughts on it. If you have any questions about it, leave a comment down below. I'll tell you my rationale. But for me, I feel comfortable holding 51 holdings. I use Seeking Alpha, and it keeps me up to date on anything that changes with these holdings. A very easy and simple way to do that. I get emails whenever there's an increase. I haven't had a stock decrease or a dividend cut, but Seeking Alpha makes it very easy to be able to keep track of your dividend holdings. And for me personally, friends, I enjoy, the active, semi-active, holdings of involvement, I guess you can say, of holding 51 positions. I could do an ETF or something different, but I just enjoy it. I enjoy holding my holdings, friends. I enjoy holding my holdings. As far as my dividend yield, it's 3.396%, which is good. I'm comfortable with that. My expense ratio is 0.01%. If you have any questions about any of the data here, in terms of what I think is a good range, you can leave a comment down below. I'll let you know, but nothing looks out of the sorts here. Everything looks good to me. As far as flexing that muscle, right, like I mentioned earlier, some of my short and long-term goals, what do those look like? Well, currently, friends, I'm 28 years old. I have a short-term goal of trying to save up cash for a house, or technically for my first real estate, property. I want to get like a rental property of some sort, or just start to build equity in some real estate. Maybe buy a good starter home, live in it for a year or two, save up some more money, rent that one out and go buy another one, and just slowly start to, take some stepping stones into building, a real estate portfolio one way or another. But for the moment, my short-term goal is just to save up cash. Like I said, I used to invest $500 every single week into this dividend portfolio. Now I've changed it to $100 every week. That is my current funding schedule. That extra $400 that I used to put in here, now I'm trying to save as cash every month. I haven't been doing the best job because life continues to happen. We took a trip to Greece. We moved this year. But, with time, we'll start to gain traction again. And hopefully by the age of 30 is what I'm thinking and what I'm aiming for. 30, 31-ish. I hope to have enough cash saved for a good-sized down payment on my first rental property / live-in home. Just depends what the market is at that time, whatever looks best to do. And as far as my long-term goals, it continues to be aiming for the age of 50 to 52 for retirement. For me, I don't want to work a day past 50 that I don't want to have to work, right? So the age of 50 to 52 max is like my retirement age goal, which gives me from today, the age of 28, up to the age of 50 to 52. That's the time I'm working with. That is my window. So hopefully by that time, I'll have a significant dividend portfolio over $1 million, and I'll have, my pension from work or my 401k, whatever that looks like. Currently it's a pension because I work for the state. I'm a state employee here in the state of California, but also the goal is to have some real estate, have some passive income from real estate, passive income from the dividends, and then my pension payout or my 401k coming in. That way, when I reach the age of retirement, I'm fully comfortable. I don't have to worry anymore about money. I don't want to work this hard now to still have to work more and worry more at the age of retirement and how I would survive, right, financially. I don't want to do that. I'm doing everything in my power to prevent that. And then now, friends, for the final portion of the video where I show you how much my current dividend portfolio pays me in dividends. I know I did sell a chunk of my NVIDIA stock, but NVIDIA paid a very low dividend payout anyway. So there was actually no big hit from that at all. But as you can see here, friends, it's $66,525.41. So practically the same, just 5 cents difference. And for those that are curious, I'm not sponsored by this app or anything. It's called Div Tracker. You can find it on the Apple Store. It's just the app that I've been using since the beginning of time, friends, in my dividend journey. And I just haven't changed. I think it's like $10 a year or something like that. So for me, it's worth it. You still have to manually input everything, but despite that, it's still a good app. I enjoy using it, and it's really simple. And as you can see, friends, my annual dividend income is $2,187.34 with a dividend portfolio of the size of $66,525. So that's one thing to keep in mind. Is it a lot? I think it is. I started from $0. Now I get $2,000 a year, but you have to be realistic. My portfolio is not really huge. It's not big by any means. It's a decent size. It's respectable. But as it continues to grow more and more over time, so will my annual dividend income. And that's why I do this. And just have some fun here. On the monthly, I'm supposed to be getting $182 if you break it down. On the daily, it's just a penny shy of $6 a day, which is awesome. And as far as my dividend yield, it's 3.29%, so slightly different from M1 Finance's calculation, but nonetheless, I'm so comfortable with either or. Maybe it's somewhere in between. But for me, I like to lean a little closer to M1 Finance. I'd imagine they're a little bit more on par with what it actually is. So I'll take it either way. And so that's going to be it for this week's video, friends. Thank you so much for sticking through this one. It was slightly different. I know my equipment isn't the best, but I am here in Greece. I'm not in California anymore. I'm not in the States currently. I'm going to wrap up this trip here pretty soon. From Santorini, we're going to now go to Paros. I'm actually going to catch a ferry here in about 2 hours or so. It's about 6 a.m. here in Santorini. Oh, why you wake up so early, Jesse? You're on vacation. Well, I continue to remain consistent. I continue to invest in dividends. I continue to make my YouTube content. And I continue to wake up early. I continue to work on personal development. I enjoy this process. But now, once I'm done and I hit stop on this recording, I'm going to go back to living in the moment. Living in the moment. And I'll see you on the next one, friends. For you, practice the power of consistency. Keep it on the forefront and the back end of your mind. Until next time, friends. Take care.